Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here back with your daily crypto news and analysis, and today we're going to be talking about the entire crypto market. So sit back, relax, and before we fully jump on into this video, I do just want to ask guys, could please leave a like on this video. It does help the channel grow immensely, and of course I always do greatly appreciate it. Now overall, I'm going to be addressing a few things. Obviously, we're going to be talking about, are we in a bull or bear market, right? A lot of individuals are calling for a bear market. We've seen BitBoy today say, hey, we're in a bear market. Welcome to the bear market. Honestly, let's address a few things first off. So, honestly, I don't think a lot of individuals were around during the true bear market of crypto, and I think that is why, everyone really kind of thinks that like these little spikes down in price, mean that we are in a bear market. I think that we're a little bit away from a validation on, hey, we're in a bear market. Obviously, we're kind of just like, waiting sideways for the next major move here. And everyone's kind of comparing this to 2017, 2018. And when we look back on things, I do believe that we're in a very similar structure. And we're going to be addressing this and talking about it. So let's actually address a few things. So first off, I tweeted out saying, hey, do you guys think that we are in a bull or bear market? And this really kind of tells me out of 181 votes so far, that we're basically in an uncertain market. A lot of individuals are uncertain where things are headed. Nobody really knows if we are in a bull or bear market from what I've seen at least. We see the idea on people kind of pushing these charts and saying, hey, things look bullish, but they don't really give us a deciding factor on things. So let's actually talk about a few things. First off, let's talk about why I do believe that we are in a bull market. So first off, we are going to be watching the dollar. So here we have the DXY. Now, I do believe that this is at a full reset. When we look at the current structure of this, it almost looks like we are printing that same picture of the March of 2020 dropping point, but also even going back as far as the 2016 sort of topping point, which is familiarly close to that same exact level that we hit back in March of 2020. The same resistance zone that we hit at these times, we're at that exact topping point of 102.997. Now, we did see that nice collapse on the dollar all the way back down to those lows during the January, February timeframe of 2018. This is also the level that I'm looking at right now in terms of the dollar. Of course, can we go a little bit higher? 100%. I addressed the daily candles here on the dollar. It still looks pretty good. It looks like it's riding that 10-day EMA until it breaks down below it, obviously. So when we look at this, I'm looking for a retest of the 200-day EMA. It's actually a little bit higher than this bottom structure that I have printed on the chart. It's at around like 95.84. This will, provide a nice impulse throughout the markets in terms of risk on assets, more so crypto and stocks. And then I'm, looking at this topping point yet again at around that fib level of the same structural view that we've seen us kind of break out of during, February, which is again the, 618. Now, if we look at this, we're actually kind of looking at the 702, but I'm, seeing if we are going to reject off that 618 simply because that's where we kind of had that nice impulse back in June of 2020. So if we look at this structure, I do think that we could kind of have a retest here, which would lead to a rejection instead of going up to the 702. And the reason why I say this is simply because of that retest that we've seen back here in June, which, by the way, the level that we would test is actually a little bit lower, but it is still at that, overall 200-day EMA, which I think is the same structure that we are going to be seeing, printed on the US dollar very soon. The funny thing is that coincidentally, the 200-day EMA is still moving higher. So the higher that this moves, the more and more that this is actually likely to happen, which I'm watching closely, which this will lead to that major rejection off of course, that 618, which will lead to that collapsing fall down to, again, possibly the 2018 lows, or just maybe a double bottom at around the lows from January of 2021. Now, when we talk about the dollar dropping in value, why do I believe that the dollar is going to drop in value? Well, it's pretty simple. Inflation rates are at massive heights. We are most likely going to see, a huge update within that area during the summertime, which is very close to us now. It's about 2 months away. I think that when we talk about gas and the things like that going up in value, or I should say going up in price, not value, that's going to lead everyone to think, hey, where is the actual inflation rates at? Because rent is up 50%, gas is up 50%, but I do think that this is actually going to continue to increase, especially as, printing continues to happen. But also, it really kind of says, hey, where's the value of the dollar actually coming from? Because now we are seeing nations around the world really kind of trying to move away from the dollar. Specifically, China and even Russia have, moved fully away from the dollar. China more so utilizing the digital yuan, aka just the yuan in general. So when we talk about the U.S. dollar, I don't believe that we are going to continue to see this rally, to new heights. I think that our topping point is between the 786 and of course the 1 fib up here, which is the topping point. So again, I think our local top is still around this area. We might have to bleed a little bit more to really kind of see that rejection, but I do believe that we are around that point. Now let's talk about stocks. So are stocks looking weak? Are stocks looking like they are in a bear market? No. In fact, a bear market would have been a clear break below the 50-day EMA, which it looks like we are having that nice little bounce off of course, a crucial fib level. Now, when we take a look at this, it's at 4,382 in terms of the S&P 500. This is the 382. Now, when we look at the S&P 500, it looks fairly good here. Also, the Dow Jones looks pretty good, bouncing off of the same fib level, the 382, at about almost 34,000 exact. Again, the structure looks pretty good. Now, we've had slight wicks down. This is on the weekly. Looks like we had that nice wick all the way down, that nice little almost pullback to that fib level with that nice strong bounce above. Now, take a quick look at around the 382. What do you guys see on this, overall chart? The 382 is a very strong support zone. We've broken down below it before, hence why I have this wick at the bottom structure of the February wick. But look at the, regain momentum of course, the 382 and where we currently are structured at on the 10-day EMA. It looks like we are seeing some strength being built on stocks. Looks more like there's going to be a lot more interest flowing into risk on assets as the dollar is nearing a topping point. This is going to fall. The reason why is because we are still seeing the economic crisis happening within the U.S. economy. Inflation is, it needs to be, sort of taken care of. I think that we need to see it, get, taken under control, but there's no control being taken in terms of, inflation rates. So as we continue to let this sprawl out of control, what do you think is going to happen to the dollar? The same structure is going to be printing out similar to the March of 2020 to the January of 2021 timeframe, except it could go a little bit deeper. So we're going to be watching this closely. Now also the Nasdaq. Now the Nasdaq is a little bit different. I'm not going off these lows that we recently printed because I'm actually going off the low candles of March of 2021. Now, even if we go off of the structure of the recent lows, we could still see this wicking slightly down below the 236, but still gaining a little bit of strength around this point, which is, coincidentally, the support zone from the weekly candle of February 22nd and also the weekly candle of January 24th. We've also seen a little bit of strength being built around May of 2021. We've had slight wicks down below it. It's nothing too, unfamiliar before having that nice impulse to the top. Now, again, the Nasdaq, the Dow Jones, and the S&P 500 look pretty strong. But Bitcoin itself has been following the S&P closely. So until these do start their next major breakout events, I don't believe that Bitcoin's going to have a nice breakout event yet. I've been watching this closely, and more so I've been watching the Dow closely. The Dow is a little bit of a better picture printed for our evident future for Bitcoin. Now, I'm not going off these current lows of the January candles. I'm actually going off the summer lows. The reason for this is because if we do come down to test that 236, the 38 point almost 3K zone, this is where individuals are going to call for $26,000, more so almost $27,000 now, or possibly even lower. They're going to say, hey, we are in a bear market. We might even test the support going back to November 2020 at, $18,000. It's over. It's done. We're in a bear market. And then this is where, sort of the market will change. I think as the uncertainty builds within this market, I think, we should be taking a quick look back on the structure and taking a little bit of a macro view. Things are still looking good in terms of higher lows being put in place. I actually wouldn't be too worried if we had a bounce off of this 38.3K zone. In fact, it's still a higher low going off of the weekly candle of January 24th and February 21st. it would actually still be in a very similar structure to what we have been seeing printed. I mean, technically speaking, if we go off of the price range here in terms of percentages, this is about a 4% almost increase from the, higher lows. A 4% increase from here would still be under. It would be at about like 5.6K, but I'm not going off of percentages from those higher lows. I'm actually going off of the candle wicks here. So the actual candle itself being placed in here is a little bit different. I mean, from the topping, or the bottom, I should say, of this candle wick to the topping point here is about a 4% increase in, overall price, aka the higher low. It would still be around the same point that we are at now in terms of that 4%. So what I mean is, going off of this candle wick to this candle wick here, it's about almost a 4%. It's about 5% technically, but if we go off of the bottom candle wick here, it's about 4%. Meaning this could still technically be our confirmed higher low put in place, aka that low from September still being that strong point, and we could actually hold this line and have that nice impulse once we do see the dollar break down. But the reason why I do believe that we could test 38.3K is I think that we still need a little bit more fear in this market. I think, overall, this is still kind of in that uncertain area where people still think that we are in a bull market. I think that we need a little bit more fear to really kind of flush the market a little bit more. I think this grueling sideways momentum is actually enough to push retail out because they are impatient. Impatient traders make the best liquidity. I think that when we talk about the process of getting to the new all-time highs, or possibly even just breaking up to 50K plus, which is enough to still make alt season fairly good, it's going to take a little bit more of a sideways momentum to see that dollar break, to see retail kind of flowing out of crypto. I just still think that our higher low is somewhere within this range here, which is still pretty good comparing it to the past or previous higher lows. Now, let's talk about the comparisons between Bitcoin and the Dow Jones. So shout out to Tech Dev for this. Times change, assets change, macro, aggregate, human, behavioral, or behavior, I can't talk right now, usually doesn't. So check out the Dow Jones compared to Bitcoin here. So we do see that bounce off of the 50-week MA, similar structure to Bitcoin. And then, of course, we do see the initial rejection, followed by that breakout event. Now, if we do kind of ride this out, it will most likely bring us to about 90 to 130K, still hitting my 120K target on Bitcoin if we do see that. Now, the RSI looks pretty similar here, and overall, the same structure looks very similar as well. This is going back to the Dow Jones sort of impulse from 1988 all the way to around 1992. If we look back here, it's kind of going off the same structure of Bitcoin at the 2019 zone to about roughly the 2022 to 2023 timeframe, which will still kind of lead to our topping point around that 2022 sort of fall timeframe to about 2023. Similar structure to 2017, 2018. Now, why would this happen? Why would this even be remotely similar to what we are trading? Well, it's pretty much this idea that whatever's unexpected in this market will most likely happen. Everyone is still expecting a bear market. Everyone's expecting Bitcoin to crash. That is why I don't believe that that's going to actually happen. I think it's going to take everyone by a little bit of a surprise, and we're actually going to see a little bit of a structure kind of being built into the idea on alt season really coming in hard very, very soon. And I've been watching Bitcoin dominance. Looks like we have built this major strength point at around 41.33%. Nice impulse up here, and a rejection would be welcoming. It's going to take time, though. I've always said this. It takes time to see these rejections. I mean, honestly, even going back to the 2017 structure and aka 2018 structure, you could kind of see how long this grueling process does take. I mean, these are weekly candles, I mind you. So think about it like this. This process, when it really started to break down, started in February of 2017 and didn't end until January of 2018. This was in a massive bear market. We're kind of seeing that same structure right now, where our breakdown event, in terms of that, bearish cycle, started around December 2020, and we've been kind of just ranging sideways until we do see that major crashing point on Bitcoin dominance, aka leading to that alt season. Now, as we were talking about altcoins, the altcoin market cap total too still looks very strong. Very similar in terms of the Dow Jones, and in terms of the S&P 500, it's still bouncing off that 382. Look at where the support is here. Look at where we currently are trading in terms of the total too. This looks fairly strong. Again, until this market structure is broken, I'm still going to say that we are in a bull market, because we haven't seen any factors tell us that we are not in a bull market. Besides, when we take a quick look at the macro view of the economic structure, the US economy looks pretty rough right now. And I have been saying this for about, since the beginning of COVID, right? So when we take a quick look at the economy is telling us a little bit of a different story compared to what the dollar is telling us. I do believe that the dollar is much weaker than it's really being perceived on the charts. When we do see the economic downfall of course, inflation being at the topping points, and we see individuals saying, okay, listen, we need to take a quick look at the overall structure on what's happening within inflation, what's happening with the prices of things. I think that that's when we do see the dollar start to collapse, and that is most likely around the summertime. So I believe that this is probably going to, sort of trade sideways a little bit more. Even if you look at, again, the date range, I think that we're in sort of this time period on, this 21-day structure, which will most likely lead us into May. But it's a very similar structure to what we've seen back here in March. So again, pay attention to things that are happening right now within the dollar, because this is going to print us a little bit of a better picture. But do I believe that we are in a bull or bear market? I think that we are in a bull market, and the reason for that is just outlined in this video. I think that when we talk about the dollar, I think it's at its near local top. The S&P 500, the Dow Jones, the Nasdaq, Bitcoin, and even the total too are still in a very strong structure. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, I hope that you all have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.